What's up, Zingers? Welcome back to another live earnings coverage. I'm your host, Kevin Dubrisky, with the one and only Paul Meeks, and we've got some exciting earnings coming up. We have Tesla Q2 earnings. The reports are already in. We also have Google that we're going to cover as well, but make sure you guys stick around because we're also going to be live streaming the earnings call for Tesla, and we're going to cover beforehand what you should be listening for on that call. So let's get into it, guys. Tesla Q2 earnings report. So our earnings per share was a miss of a 0.40, so 40 cents per share, misses the 42 cents. That was the estimate. Our revenue was sitting at 22.50 billion, which misses our estimate of 22.64 billion. Tesla Q2 gross margin is 17.2% higher than the 16.5% estimate. Paul, what are you getting from these earnings reports on Tesla? Coming in pretty weak, a double miss.
I guess it's gratifying that they upticked the gross margin, but I would tell you here's another quarter that wasn't really a surprise, in which their auto revenues were down 16% year to year. Their deliveries were down 14% year to year. Their total revenues were down 12% year to year. And that is not a tech company, right? Our tech companies have to grow. I've always felt that, this stock at over $300 a share, I calculate that probably 2/3 of the company's market cap today is predicated on success with robotaxis, autonomous vehicles, and also with their advent of the robots. The EV business is troubled, but it's troubled for a lot of folks in this industry. And the poor relations, at least how it ended up between Trump and Musk, has added to some of that. We have no more tax credit, and that was, an actually pretty significant driver of sales. And we'll see what happens. But you don't own this company at almost any price for its EVs. You own it because you think they're going to dominate robots and autonomous driving.
All right, awesome. So guys, quick little brief into how Tesla makes money. Like Paul mentioned, it's not just EVs. Now they do have their automotive sales, which is their primary resource, which is their Model 3, Y, S, X, and their Cybertruck, their energy generation and storage, with their solar panels, their Powerwall, and their Megapack, their regulatory credits, which is them selling emission credits to other automakers, and services and others like supercharging, maintenance, insurance, and used vehicle sales. Also, they have software and subscriptions like their full self-driving and premium connectivity. So their product roadmap and innovation. And Paul, I'd love to hear your input on some of these topics because you already sort of touched upon them. So the robotaxi, which is their autonomous vehicle with no steering wheel or pedals. Paul, do you think they're going to mention this in the call today?
I think if they don't mention it, it'll definitely raise a lot of questions, because a few weeks back, they started their autonomous vehicle robotaxi trial in Austin, Texas. Now, they started with only a handful of vehicles, about a dozen vehicles, and these vehicles were geo-fenced, so they could only go to certain parts of Austin, Texas. Of course, Waymo, which is a Google property, has already been doing hundreds of thousands of rides in their autonomous vehicle, and not just Austin, but other cities as well. So as of now, Waymo is way ahead.
And they're Waymo ahead?
Yes. And because, yeah, there you go. And because, Google has such big resources, you think they could continue to plow money into this to stay ahead.
Right.
There's a lot of pressure right now on Tesla's balance sheet.
Wow,
so we'll see. I think it's really important that trial goes well, and that they end up extending the trial to other cities. And then, Musk says that in a year or so, there's going to be 1 million of these vehicles crisscrossing the United States. Of course, he also said that back as far as 2015 or 16. Now we're at 25, talking about 26. We'll see.
He'll keep saying it till it happens, I guess. Jack in the comments asked, wasn't the big, beautiful bill removing the EV tax credits?
Yeah, that's significant. And I don't think it was really a surprise. And maybe it had nothing to do with the torn relationship between Trump and Musk, because Trump even telegraphed this while he was campaigning. But you think about it, over $7,000 in a tax credit,
Wow.
that might have somebody, since it's been pulled off, say, you know what, I was going to buy it, now I ain't.
That's
So yeah, I think it's significant obstacle.
I believe so. That's a great point. Now, what about their Cybertruck, the production ramp and delivery updates? I feel like the Cybertruck was something that they released and is just failing to pick up any momentum.
Yeah, it sucks. We've all seen them, in our neighborhoods. The problem is we don't see many of them, and I've always felt that the total available market for a vehicle like that was so small, so small. And so
Yeah.
yes, that's obviously, no
A tough
question.
sell.
I think everybody would have to say it's been a disappointment since its launch.
Absolutely. Absolutely. Do you think maybe they make a change to it? I feel like at this point they would need to make a change to see some type of momentum to the upside. Now, again, Tesla
I think
overall as a
what
company,
end up doing is, I don't know if there's much you can do with the Cybertruck. What they need to do is ultimately launch a lower cost vehicle,
yep,
right?
like a new
To get
vehicle altogether.
that, 20 to 25 to $30,000 handle. As of now, unless you get the stripped down version of a Tesla, which most people don't buy, it's still much more expensive than a internal combustion engine sedan.
Yep. Okay, so maybe some progress towards their 4680 battery cell production and integration. Steve mentioned, sort of sounds like a bunch of bear talk, but at the moment, Steve and the rest of the audience, guys, we're just sort of looking at Tesla as a whole, as a company, right? We're looking at their products roadmap, their innovations, how they make money, and what we should be listening for on the call. So updates on Tesla's semi and potential fleet sales. This is another one that they've sort of been talking about, I feel like, for a couple of years now. Do you see this also being something that they might mention on the call?
I don't think so. I think the focus will be less so on the EV business at all and more on what everybody knows, including Musk, that the valuation drivers are for the stock, which is give me an update on what's going in Austin, Texas with a robotaxi, and tell me how great these robots are going to be in the not too distant future.
Awesome. And of course, their Gigafactory expansion into Mexico, Berlin, and Texas. They're trying to expand. We see that. I don't know, guys. We're going to really have to stick around for their call. Now, usually the earnings call, everyone, is at 5 p.m. Eastern. Today's call is actually going to be at 5:30 p.m. Eastern. So make sure you stick around, hit that like and subscribe button so you're up to date on the next major earnings. Now, after we go over these next couple slides, we're going to go over Google as well, because Google also announced earnings. That is parent company Alphabet. We'll see where they stand, how they make money, and some breakdowns into that company as well. So some risk factors to watch is increased EV competition, particularly from Chinese automakers, margin compression from ongoing price cuts, as we see Teslas have been sort of taking some hits on the prices lately. So with that being said, their profit margin is going to be taking a hit as well. Regulatory and tariff risks across global markets. This is something that poses a risk for most major companies, not just Tesla. And execution risks for new product launches and gigafactories. And of course, Elon Musk's investments into non-Tesla ventures like XAI, like X and Twitter, and of course, like his brief encounter in politics.
Right. Yeah, I think a couple interesting things here. First of all, the last one, I find it intriguing that he started by buying Twitter, right? Rebranded it as X.
No.
And then to give that company a boost, because that wasn't really working out, he spent $44 billion on it and been a disappointment so far, kind of forced the merger of X with XAI.
Right.
And will probably force the merger of those two merged companies into Tesla at some point.
And so that's an interesting take.
You control all of these companies, shareholders may just want one piece. At the end of the day, whether they like it or not, they will be getting all the pieces. And one of the reasons to merge these is so the good businesses can support the bad businesses all under one roof.
Interesting. That's a great take. It's something I didn't think of at all. It's something that they could sort of do to combine, right? Combine
Oh, yeah.
X into Tesla.
And,
Have them.
and they've already done it, right?
Yeah.
XAI has been swallowed up by X or
Yep.
vice versa. And Musk has already talked about how he is going to put to a shareholder vote for Tesla to essentially support those other two companies.
Wow.
Yeah.
Wow, guys, big things coming for Tesla. Real important to listen to this earnings call today. Just like every earnings report, it's very important because this is when they're announcing their roadmap, their plans for the future. Next time we get a call like this is the next earnings report. So these are very few in between. We want to be aware of them, especially if we're investors in these companies. So what to listen for on the call, a little bit of a wrap up into everything we were just covering. Of course, is robo-taxis is probably the biggest thing, the biggest topic on everybody's mind. Everybody wants to know, are they going to start to push them out further? How was the trial? What's going on?
Yeah.
And of course, the Optimus, right? The Optimus automated bot, the robots, the humanoid robots they're trying to create as well. Paul, you got a great point. Maybe at this point, they're sort of weaning themselves away from vehicles and trying to get stronger into AI, stronger into autonomous, stronger into things that could, I don't want to say take people's jobs, but a robo-taxi, we're looking at autonomous and automating a lot of jobs and things like that. So update on gross margins and pricing strategy. This is one we mentioned before with the price cuts. So because of price cuts, the gross margins are going to feel that. So how are they going to, as a company, develop a strategy to continue to try to progress and profit, even though we're dealing with price cuts? Forward guidance on deliveries and production, progress on full self-driving development and monetization, and management of commentary on macroeconomic conditions and AI initiatives. AI is all over the place, and our macroeconomic tariff uncertainties are truly driving these markets mad. Paul, what are your thoughts on this?
I think you've hit the nail on the head. I agree that the first bullet, the robotaxi and Optimus updates, are absolutely key. As I said before, I forecast that at least 2/3 of this gargantuan market cap comes from not the EV business at all, because the EV business, unless it stabilizes, has been in a pretty steep decline and brings it lower profitability as well. The other thing I think people should know is not only did the feds take away that $7,500 tax credit, which may now have some folks not buying that Tesla or an EV, but also Tesla made high profit on the regulatory credits that it sold to others. So if you have a polluter that needs to buy some carbon credits, Tesla sells it to them. It's very high margin for Tesla, but the problem is now that little arbitrage, that transaction has also gone away. And so that's going to hurt their P&L, because those were, even though they weren't that big on a dollar basis, they were super profitable revenues that will now probably go to zero over time.
Wow, guys. A lot going on into Tesla, and a lot of these questions and a lot of these topics that we're covering will hopefully be answered on this earnings call at 5:30 p.m. Eastern. So again, guys, make sure you stick around. But for now, we're done with our Tesla information. Let's cover Google. I'm curious to see, where is Alphabet? Where is Google? What's going on? So Google Q2 earnings report, earnings per share beats. So we have a 2.31 EPS, beats the 2.16 estimate. Our revenue is $96.43 billion, which beats the $93.94 billion estimate. This is a 14% gain year over year. Google Cloud revenue is at $13.62 billion. Ads revenue is at $71.34 billion. And operating margin is 32% with a net income of $28.2 billion. Paul, give us a little summary. What's going on here?
Yeah, I was pretty happy with this report. The stock is ticking down a little bit after hours. Revenue in line to better, EPS better. If you peel back the onion, YouTube's revenues a little bit better than expected. Cloud revenues a bit better than expected. The only metric, Kevin, that I saw that might have been a slight disappointment is their TAC, which stands for Traffic Acquisition Costs. Think about it as a cost of goods sold for a digital advertising company. And the percentage was 15.2% of total revenues. I think the street was expecting 15.1, maybe even 15.0. But at the end of the day, really not that big of a deal. Pretty impressive report. Of course, the problem here is not what the company is reporting. It's they have to turn the narrative around that some people have that these guys are going to get behind in AI.
Yeah, no, I'm fully with you on that. I don't think Google's going behind at all on AI. I think they've been making some great, strong moves towards the AI world, I would say.
Yeah.
To your
It may be more of just a PR thing because they do not communicate their AI prowess well enough. And yeah, maybe they should fire some PR people and get some new ones. Yeah, I think at the end of the day, they will be a major player. But in the short term, there is absolutely no question that they have lost some search share and with it, some digital advertising share to Perplexity AI and some of these chatbots in which people are now getting more comfortable to search through that means instead of the old Google search.
Right. No, that's a great point. They should sort of push it to say, hey, listen, Google's right there with the GPTs, with the AIs, and come use our Google AI, this brand, this brand. They don't have just one Google AI. They don't just have, what is it, Copilot? No.
No, they have Gemini.
Gemini, that's right, Gemini. It's not just Gemini. There are others that are implemented into different positions. They also now have the VO3, which is that it makes the short form content that looks super realistic. They're expanding very strong in the AI world, but great point by Paul that they're sort of lacking in the field of advertising it and promoting it so more people are aware of it. So
Yeah.
Google services, obviously their core guys is their search engine, YouTube, Gmail, Maps, and Google Play. They're primarily an ad-driven revenue. Google Cloud for their infrastructure, data, and AI services. And it competes with AWS and Azure, right?
Right.
So other bets would, what was that?
Yeah, no, you're absolutely right. Yeah, so not just AWS and Azure, but also OCI, which is Oracle Cloud Infrastructure. But yes, that's why they call them a hyperscaler because of those mammoth expenditures on mammoth AI data centers.
Yep. Yep. And other bets that they have, of course, includes Waymo, as you mentioned when we were going over Tesla. That's their self-driving. It's a bit further down the line than Tesla's self-driving robo-taxis are right now, right? They're having trials in other places.
They have a huge lead. And the interesting thing people should know is it's not necessarily an apples to apples comparison because Waymo uses LiDAR and other sensor technology for its autonomous vehicles, whereas Tesla uses old school cameras. Now, not to say one is better than the other, but Musk will tell you that we will be the champion of autonomous driving because when you use the camera technology, you can actually build and outfit cars much less expensively than Waymo's use of the sensors. So Musk will say, oh, over time, they'll have lots of cars, but they won't be profitable because they're too expensive to make. We'll see. But there's actually kind of VHS versus Betamax going on. They don't use for autonomous vehicles the same technology.
That's an interesting comparison, Paul. I like that. All right, guys. So AI and cloud, they're growth drivers. Gemini AI model integrated into search, Gmail, and Docs. Even if you're not using Gemini, if you just go to Google search something now, the first thing that comes up is creating with AI, and it gives you a little summary of whatever you looked up. So they are integrating it, but barely advertising it. So we do have to see, maybe they're going to announce on this call, we're not getting rid of our PR team, but we're going to make a stronger stance in our social media presence in the sense of creating more advertising, making it more accessible for these AIs. I mean, something like ChatGPT, you go on, you log in through Google, and you're able to use it for free right there, plain and simple. Gemini, same situation, but to a lot of people who are already used to one, it's hard to transition to another. So how can they make it as a company even more accessible, even easier to use, and something that blows the other competition out of the water, something that they can offer that the others can't?
Well, the nice thing is the company does have the resources,
Yep.
right? It has a powerhouse balance sheet. The digital advertising business, their core business, is very lucrative, generates a lot of cash. So they could throw a lot of money at this problem, either through internal R&D, or they could easily acquire something like Anthropic or Perplexity AI.
Oh,
That wouldn't even financially be that heavy of a lift. And so maybe they should consider that.
that
If you can't beat them, join them.
that's a great point. And Google has done that. A lot of these large companies, when they can't beat somebody, they will, like you said, can't beat them, join them. And that's not that big of a hit on them. They definitely have the capital to do so. So their Google Cloud continuing strong enterprise growth, AI hardware, TPU updates, cloud-based AI compute offering, competition like Microsoft, Amazon, and Meta making it aggressive for AI investments, right? Meta is also taking a big jump into AI. They have the Meta AI glasses that are a big thing. Not too many companies offer glasses like that, so they're sort of taking a stance there. Amazon has its own, not AI, but it has its own AI integrations into a lot of its platforms and systems. So all of these companies are moving. Microsoft, I believe Microsoft's the one with Copilot. That's where I got it wrong.
Yeah.
So Microsoft has Copilot. All of these companies know that AI is the big movement right now, so they're jumping aboard that wave, right? These companies don't fight it, they ride with it.
One of the things that I think is interesting about the AI, and I'm looking forward to hear on the call in just a minute, is that the last time that they reported, right? So they spoke to us in April after their last quarter ended on March 31st. And at that time, they said they were going to spend $75 billion in 2025 on capital expenditures, which the read through is mostly for AI infrastructure. It'll be interesting to see today when they update that guidance, if they do so at all. Do they keep it unchanged? Do they increase it? Do they potentially even reduce it? So that'll be a real tell. And that usually comes in the back half of the call.
Wow. Okay, good stuff. Got a lot to listen for on this call, guys. I believe the Google call, and producer, tell me if I'm wrong in the comments. The Google call, I believe, is taking place at 5 p.m. Eastern. It's the Tesla call that's going to be at 5:30 p.m. Eastern.
I think Google's actually 4:30, so
Oh,
probably just kicked off. Just
yeah.
kicked off.
Just kicked off, guys. So advertising business is still the engine, right? So search ads remains dominant in ad markets. YouTube is a strong creator ecosystem, shorts gaining traction. As we all know at this point, anybody who is on their phone, younger generations, middle-aged, older generations, at this point, everybody's got a smartphone and everybody has some type of social media that they tend to scroll through in those off times during the day. Whether it's you're scrolling through YouTube Shorts, scrolling through Instagram Reels, TikTok Shorts, whatever the case is, these short form Facebook Shorts, these short form content videos are taking over. People's attention spans very slim, very small. So we have to be quick with the content we have. We have to be prominent with it, and we have to be smart with it, right? So these small businesses, these, again, with shorts gaining traction, YouTube's a big component in there. YouTube is already a huge company. Now throwing in shorts there, those are picking up more steam, more views, more engagement, and that's helping the creators and YouTube's ecosystem to grow strongly as well. I think, Paul, you mentioned that YouTube came in a bit stronger revenue-wise, no?
Yeah, it looks to me like YouTube came in at $9.8 billion revenue. The street was expecting 9.6. So
Okay.
that was a slight beat. We'll see what happens. When it comes to the digital advertising business, there's really just two drivers. One is that Google maintains its market share. Right now, it essentially has the whole pie, right? It has about a 90% share, but we know that that share will bleed over time by these AI native platforms taking share. And then the other thing is just purely macroeconomic, right? Digital advertising dollars. If their customers have the money to spend, they will spend it. But in a recession, companies will cut back their spend. So there is a real macroeconomic can't control vibe here. And so, yeah, we'll have to see what happens over time.
Awesome. So, and of course, some risk, the ad spend sensitivity in a softening macro environment. Things always come into play, guys. There's never just they make money with ads, that's it. No, there's always something deeper to the puzzle, right? When we're trading, if we're day trading, if we're swing trading, investing, if we're looking into a company, it's almost like a puzzle, or it's almost, I always like making the comparison of building a house, right? We never just throw some walls up and call it a home. We need foundation. We need some walls of support. We need some windows. We need a door. We need a roof. We need the blueprint. Okay, so what's the blueprint of this company? What does it have to offer? What's its support, which would be the walls? What is it mainly working off of? And then we could go from there. So some risk factors to watch for on Google is regulation. This is ongoing antitrust scrutiny in the ES and EU. So that's something we'd want to keep an eye on. ES and EU, I believe that they were coming close to a trade deal. I saw this morning about a 15% trade deal. So we're going to have to see. Again, US also announced that next week Bessent announced that the US is going to be speaking with China next week, discussing possible trade deals, which could, again, potentially push back our August 12th tariff deadline for the billionth time. So we'll see what goes on with that. And that will also sort of keep our markets in a direction, right? In a directional pace. Right now, markets have sort of been range bound the past week or two because we've been anticipating. At first, when we were coming into July, we were expecting tariffs to begin in the beginning of July. Then they pushed it back another month to August 1st. Now they're saying August 12th. Now they're saying they're going to talk to China and they might push it back again. Where does it end?
And I would tell you that even the current tariff rates, right? The current tariff rates, if they can't reach agreements, those tariff rates, as they exist today, have a U.S. effective tariff rate of over 20%. And that in and of itself, without further changes, is the highest effective rate we've had since the 1930s.
Wow.
And when we had high tariffs in the 1930s, that ended very badly. We'll see. But right now, even if things unwind and there are no changes from today's rates, and they're going to be onerous for a lot of companies.
Wow, that's a great point. Guys, make sure you're hitting that like button, hit that subscribe button, hit the like button definitely for Paul, though, dropping some great knowledge, great information, and great views on these companies and what they're doing, what they're looking for to push out, and what to expect on these earnings calls. Paul, you have any other last second notes or anything we should consider?
My buddy Kevin, I am going to go right now to the Google call. I'm going to get right on it.
Awesome. You go enjoy. Paul, thanks so much for your time.
All right. Best wishes, my friend.
Best wishes. Take care. All right, guys. Some other stuff that we could look for the Google call is we're going to look to see if they mention anything on the Gemini AI traction and monetization, Google Cloud profitability updates, regulatory updates, especially in the EU and US. We're going to look for CapEx outlook tied to AI infrastructure investments and cloud and AI monetization, cloud diversify revenue beyond ads. To apologize about that. Guys, let's go over some key levels. Let's do some technical analysis real quick, see what the stocks are currently doing. We'll hit Tesla first because that is the earnings call that we're going to be waiting for on this live stream. Guys, don't forget the earnings call is usually at 5 p.m. Eastern. Today, though, they're having it at 5:30. Got our timer up and running. We're ready, guys. That's a cool timer. Guys, we got an awesome producer here at Benzinga. Make sure you hit that like button, show him some love. All right. So, guys, first thing I see on Tesla is I see that we're in a real range right now, right? We've been in this range since early May. So for the past, using the measurement tool, 50 bars, so 75 days, we have been within a range of lows around 290 to highs around 350 to about 360. So with that being said, what I like to do, guys, when we're trading some type of market, whether we're trading futures, whether we're trading stocks, options, we want to note where those possible ranges are. This gives us the advantage and the upper hand to say, okay, we're either A, at the top of a range, and we should either wait for the breakout and retest, or B, we're at the top of a range, I should look for a short position targeting towards those lows. But the one thing we don't do when we are trading within a range, guys, is we want to make sure we're not trading in the middle. As we see, when we reject a high, we get a nice push lower. When we hold the lows, we get a nice push higher. But when we're trading in the middle, we see that there's a lot of range-bound price action, and that's when there's a lot of uncertainty, because you're going to have half of the traders looking to take a long position to target the high of the range, and another half of the traders looking to take a short position targeting the low of the range. There's an imbalance. There's an unsure in the market. Buyers and sellers are disagreeing on price. Therefore, it gives us poor price action. Now, we could also look to see on Google, is the other one that we were looking to cover. Something I would essentially like to see on Tesla is I'd like to see if our earnings call comes out and gives us a little bit of a bearish sentiment to see if we could start to push lower back towards this 290 area, because I do believe Tesla is a pretty solid buy under 300. NFA, not financial advice, but looking at the overall trend, looking at the overall ranges, as we see, we were talking about ranges up here. Well, the range down here was between 230 and about 280. We broke that range, and now this 280, 290, that's our area of support on our new range. So unless we break below 270, I would not like to look for a long-term short position on Tesla. I would like to see if it could hold around at 285 is a pretty good key level right there. As for breaking to the upside, if let's say they get on the call, they announced robo-taxis are going to start hitting new states, gives us a very strong reaction, and we start to pop. Something I'm going to look for is to see if we can break above this 357.50 price level, because then what will happen is we're going to be creating a higher high. So right now, if we use our trend line, or if we use a tool like this, we could draw out and see, okay, well, right here, we created a higher low, but right here, we created a lower high. So we're getting range-bound price action. Now, again, right here, created another higher low. So that usually signals a bullish move, but the lower high signals a bearish move. So what that shows me is that Tesla is getting smaller and smaller and squeezing in a range. And guys, what happens when markets squeeze? Well, we get some type of short squeeze, or in some cases, a long squeeze. So normally, though, we call them short squeezes because they do tend to squeeze the shorts. So the question is, can we squeeze and try to get a strong break off of a good earnings call? That's what we're going to look for on Tesla. And that would also help the economy of ES and the NASDAQ continue its bull trend higher too. Because right now, guys, this is our ES S&P 500 futures chart. We're at new all-time highs. I believe that's the same with NASDAQ as well. We could take a quick look. And we see that, look at this, guys. NASDAQ actually just missed our all-time highs today by just a few ticks, but it is near them. So we have to recognize what the trend of the overall market is. It is currently bullish. Can Tesla get positive earnings reports, positive earnings call at this point? We know they had a double miss. We know that it wasn't really looking too good on revenue and earnings per share, but we also know that one strong phone call, one right thing said by Elon or whoever's going to be speaking on the call can really change the trajectory of Tesla, can really look to push us higher in the long run. Look at this earnings report we had on March 2025. I'm sorry, this was April 22nd. It was a double miss, just like we had today. It's funny, it tells me it's a double beat. I believe this is wrong information here on Tesla through TradingView. So be careful that you get the right information, guys, when you're going over your reports. But what we're going to do is we're looking to see if Tesla on the earnings call can go over something positive for the robo-taxi, go over something positive for the autonomous, the robo-bot that they're making, something that will really drive a company in the right direction and make investors say, wow, that's great. I really want to see some follow through. Now, as for Google, guys, this is another one that we were looking to cover. Google's currently up pre-market. Right now, we closed around 191.51 and is at 195.82 right now. It's still climbing. So right now, we're currently up over 2% on Google. I would personally like to see if Google, can fill this gap fill over here. We're going to mark this with our style. Let's do extend left off. Just extend right. So this is a gap on Google in the sense that price closed this day, February 4th, at price level 207.71. And then the following day, it gapped all the way down to 193. but it was able to make its way back up a couple of points. So what happens when we get these gap fills, guys, is I like to look for some type of rejection when we're in it. So tomorrow, when we open higher on Google, I'm going to look to see how that first candle opens, right? That first 5-minute and first 15-minute candle. If we're able to open somewhere here in Google and find some selling pressure, then that might be a pretty good short position, seeing that a lot of people are chasing the highs. If we open and we find support near these price levels, 195, then I'm going to look to see if we can continue higher on that as well. I know, yeah, man. They had an extremely reduced expectation on Tesla. Shame that they missed again. Real difficult time for investors of Tesla. But we're going to see, guys, we got to listen to that earnings call. Even though they missed on their earnings report, their earnings call could change the trajectory of the company. So we'll keep an eye on that, guys. Make sure you stick around. The earnings call is in 23 minutes. Usually it is at 5 p.m. Eastern. Today is at 5:30. We have our countdown, 22 minutes left. We're doing our analysis, so clearly we have a range on Tesla. Would not look to buy or sell at this point. I'd really look to see where we want to open after we get our earnings call. Not right after our earnings call, when we open tomorrow for the New York session. Tomorrow is Thursday, and we still have Thursday and Friday to trade for this week. So we could take a look at our weekly candle, we could take a look at our monthly candle, get an idea of where we're currently trading, if we're creating higher lows, what's the general bias. Okay, well, I do see we had a bit of a monthly demand zone right here where we had our basing area, then we had a strong impulse move away, and it continued higher to all-time highs on Tesla. We then pulled back, and if we throw our Fibonacci tool on here too, from our pivot low to our pivot high, it lines up perfectly within our optimal trade entry. Guys, our optimal trade entry is between the 61 and 78% fib when you're drawing it from the low to the high, or vice versa, the high to the low. So it came back to a strong fib extension, came back to a strong area of demand. It held it on the monthly time frame. We see it held higher, it pulled back, and it created a higher low because now we're pushing higher again. So same situation as I just mentioned before on Tesla, guys, where I really want to see if we could break above this 357. If we could get above 357, this 367 area, I would love to see Tesla make its way back towards about 400, 417. If we do fail, I'd like to see Tesla maybe fail around 330 and make its way back towards that 290 and 285 area. Those are the levels I'm going to be watching on Tesla tomorrow. Now, guys, as a futures trader, I watch Tesla every day because I know that it has a pretty big, significant impact on the ES and the NQ, seeing that it's one of the top 10 holdings on those ETFs or futures. So keep an eye on Tesla. I keep an eye on Amazon, Google, not so much Netflix isn't in the top 10 holdings, but Amazon, Apple, Microsoft, Meta, NVIDIA, of course. These are all equities and stocks that I like to watch. Now, as for Google, we're in a bit more of a clear bull trend right here, right? So they have a nice strong rally. We broke this range low, this range high right here. So around this 182, it was resistance. We surpassed, we held it as support. Now we're in a bullish trend on Google. Why? Well, because we're also on a bull trend on the market in a total, because we have been trading near all-time highs. Even though markets have been choppier on the daily time frame, and we could see that very clearly right here on the NASDAQ, since July 1st, we have been range bound, and yet we've been making higher highs and higher lows. But it hasn't been a smooth trend, right, guys? When we're looking for trends in the market, we look for continuation. We look for something like this right here, where we have a consistent broken previous day high, closed green and strong, broke previous day high, closed green and strong, and we get that consistency. That's consistency in the market, consistency in the trend. That's what we look for in a trend like that. When we see that every time we buyers step in, sellers step back in, that gives us a range. Even though we're pushing higher, that would tell me that, okay, I should probably be looking for longs. This tells me I should really be looking for a scalp, because right now buyers keep failing to sustain higher, but sellers keep failing to hold us lower. So until we get some type of geopolitical update, economic change, trade deal going on, or these earnings push through and everything is positive, we're going to probably continue to see this type of price action. All right, guys. So Google pushing higher towards 197. Ideally, I would like to see it above that 200 mark to make its way to 204. But keep an eye on that 200 mark for a key psychological level in the sense that people might be looking to sell some of their position there. Anybody that's swing trading long positions on Google under 180 might be looking to target key level 200, right? That's something that we have to sort of think in the mindset of if we were already in this trade, where would we target? Because there are traders that are already in this trade. So there is going to be liquidity sitting at these levels that are commonly used. Those are key psychological levels: 200, 205, 210, 215, 225, 250. You could go by fives, you could go by tens. These are key psychological levels that we like to use, especially when markets are at all-time highs, because when we're at all-time highs, we don't have any historical levels to work off of. Guys, make sure you hit that like button. It was great having Paul on today. He had some great insight on Google and Tesla. I'm real excited for this earnings call. Is in about 16, 17 minutes now. Make sure you hit that like, make sure you hit that subscribe, and I will see you guys later. Yeah, Robotaxi is a huge talking point. We really got to see if they're going to pull through with it or not. That's going to really be the make or break for Tesla on this earnings call. All right, everybody, take care, happy trading, and trade carefully.
Good afternoon, everyone, and welcome to Tesla's second quarter 2025 Q&A webcast. My name is Travis Axelrod, Head of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q2 results were announced at about 3 p.m. Central Time in the update deck be published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Travis. We've had a very exciting quarter. We're able to successfully launch Robotaxi, so providing our first drives with no one in the driver's seat with paying customers in Austin. And as some may have noted, we've already expanded our service area in Austin. It's bigger and longer, and it's going to get even bigger and longer. We were expecting to really greatly increase the Austin service area to well in excess of what competitors are doing. And that's hopefully in a week or so, a couple weeks?
Yeah, a couple of weeks.
A couple of weeks or so. And then we're getting the regulatory permission to launch in the Bay Area, Nevada, Arizona, and Florida, and a number of other places. So as we get the approvals and we prove out safety, then we'll be launching autonomous ride-hailing in most of the country. And I think we'll probably have autonomous ride-hailing in probably half the population of the U.S. by the end of the year. That's at least our goal, subject to regulatory approvals. I think we'll technically be able to do it. So assuming we get regulatory approvals, it's probably addressing half the population of the U.S. by the end of the year. But we are being very cautious. We don't want to take any chances. And so we're going to go cautiously. But the service areas and the number of vehicles in operation will increase at a hyper exponential rate. Some other notable things. Model Y in June became the best-selling car in Turkey, Netherlands, Switzerland, and Austria. It is, I believe, the best-selling car of any kind in the world still. Autonomy is a big factor there. So even without supervised, even with just supervised self-driving, it's a huge selling point. And it's worth noting that we do not actually yet have approval for supervised FSD in Europe. So our sales in Europe, we think, will improve significantly once we are able to give customers the same experience that they have in the US. This is, I think, a very important point to convey. And we've been working with our main country regulator, which is the Netherlands. And I think we're close to getting approval with the Netherlands. Then it's going to go to the EU. It's quite a Kafkaesque. In fact, Kafka had no idea that something like the EU could exist. Beyond Kafkaesque challenges with bureaucracy, but we will get the approvals, and I think we'll get, so people in Europe will have an experience similar to that of the US. In most of Europe, this year, hopefully, at least partially in this quarter. And then we also had some regulatory challenges in China, which we're hoping to unblock shortly, because we also cannot provide supervised FSD in China currently. But we're going to unblock that soon. That's another major. It really is the single biggest demand driver And then within the U.S., as we get confident about safety in different geographic areas, we will loosen up on how much somebody has to be laser focused, to have their eyes laser focused on the road. Because that's been a common complaint. In fact, it does create an odd safety issue where people will sometimes disengage autopilot, then do something, change the radio, or maybe look at the phone, drive with their knee, and then re-engage autopilot, which obviously is less safe than simply keeping autopilot on. So anyway, we're get that experience will improve in the next several weeks. Because of our focus on Austin with no one in the driver's seat, the production release of autopilot is actually several months behind what people experience on a robotaxi in Austin. So now we have the robotaxi in Austin launched. We'll be adding back those elements so that there will be a step change improvement in the autopilot experience for people outside of Austin. So this is really, as you can tell, this is very much sort of autonomy is the story. Like we need the physical product, without which you cannot have autonomy. But once you have the physical product, you need the autonomy is what amplifies the value to stratospheric levels. We also launched the Tesla Dyna, which has been a huge hit. It actually got worldwide attention, which is unusual for a Dyna. Dynas don't typically get headline news around Earth. But this is a pretty special Dyna, and if you're in the LA area, it's worth visiting. It's sort of a shiny beacon of hope in an otherwise sort of bleak urban landscape, frankly. So it's really quite a lovely experience. Great job by the Tesla team there. On the full self-driving front, continue talking about that. We're continuing to make significant improvements just with the software. So we're expecting to increase the parameter count. Actually, at this point, I think we can probably 10x almost 10x the parameter.
Yeah, roughly.
Yeah, roughly 10x the parameter count. So this is actually a very tricky thing to do. Because as you increase the parameter count, you get choked on memory bandwidth. But we currently think we can 10x the parameter count from what people are currently experiencing. So not just a 4x, actually 10x increase in parameter count. Yeah, so there's still a lot of improvement on the existing hardware to happen. Energy is growing really well, despite headwinds from tariffs and various supply chain challenges. The Megapack is expanding capacity quickly, and we have upgrades to the Megapack that will make it even better. And we had record Powerwall deployments again in Q2. So I think batteries are just going to be a massive thing. The scale of battery demand is, I think, not that many people appreciate just how gigantic the scale of battery demand is. The way to think about it is that the U.S. sustained power output for the U.S. grid is around 1 terawatt, but average usage is less than half a terawatt. If you add batteries to the mix, you can run the power plants 24/7 at full capacity, thus more than doubling the energy output per year of the United States, just with batteries. But that's again. big deal. It's a really big deal. Optimus. So we're evolving the Optimus design and really getting Optimus to the point where it is a phenomenal design. So we're in Optimus version 2 right now, sort of 2.5. Optimus 3 is an exquisite design, in my opinion, and will be an incredible. As I've said many times before, it predicted it will be the biggest product ever. It's a very hard problem to solve. You have to design every part of it from physics first principles. There's nothing that's off the shelf that actually works. So you've got to design every motor, gearbox, power electronics, control electronics, sensors, the mechanical elements. We've also got to train Optimus to use its lens and its sensors with a neural net. But we'll be applying the same techniques that we've applied for our car, which is essentially a four-wheeled robot. And Optimus is a robot with arms and legs. So the same principles that apply to optimizing AI inference on the car apply to Optimus, because they're both really robots in different forms. And Tesla, it is important to note that Tesla is by far the best in the world at real-world AI. Like a clear proof point for that would be if you compare, say, Tesla to Waymo. Waymo's got, the car is festooned with God knows how many sensors, and yet isn't Google good at AI? Yes, but they're not good at real-world AI. Thus far, Tesla is actually much better than Google by far, and much better than anyone at real-world AI. And by far, Tesla has the best inference efficiency. I think a key figure of merit for AI is what is the intelligence per gigabyte? And people talk about parameters, blah blah blah. But I think we'll stop talking about parameters and talk about gigabytes, because with the parameters you can have 4-bit parameters, 8-bit parameters, 16-bit parameters, but the actual constraints in the hardware are how many gigabytes of RAM and how many gigabytes per second can you transfer from RAM. Therefore, it is not a parameter constraint. It is a byte constraint. Tesla has the highest intelligence density of any AI by far. And I have a lot of insight into this with XAI. XAI is, Grok is the smartest AI overall, but it's Grok 4 is a giant beast. Sort of at the terabyte level. So it's kind of important to note Tesla has the best intelligence density. And intelligence density will be a very big deal in the future. It is now. So with Optimus 3, which is really the right design, it's like it doesn't have, at this point, there's no significant flaws with the Optimus 3 design. But we are going to retool a bunch of things, so it'll probably be prototypes of Optimus 3 end of this year, and then scale production next year. I'm going to try to scale Optimus production as fast as it's humanly possible to do so, and try to get to 1 million units a year as quickly as possible. I think we can get there in less than 5 years. That's my sort of, I guess. That's a reasonable aspiration, is 1 million units a year. 5 years. It seems like an achievable target. But in conclusion, so far 2025 has been a very exciting year. A lot of major milestones. We've made clear, demonstrable progress in autonomy that a lot of naysayers said we would not achieve. But it's worth noting that we have done what we said we were going to do. Doesn't mean we're always on time. but we get it done. And our naysayers are sitting there with egg on their face. So great progress by the Tesla team. Yeah, I do think if Tesla continues to execute well with vehicle autonomy and humanoid robot autonomy, it will be the most valuable company in the world. It's a lot of execution between here and there. It doesn't just happen. But provided we execute very well, I think Tesla has a shot at being the most valuable company in the world. Anyway, obviously, I'm extremely optimistic about the future of the company. Best way to predict the future is to make it happen, and we're making it happen here with the Tesla team. So I'd just like to say thanks to all of our supporters, and I think we've got an incredibly exciting future.
Great. Thank you very much, Elon. And Vaibhav has opening remarks as well.
Thanks, Travis. As Elon mentioned, Q2 was an interesting quarter in a few respects. We started ramping up the production of the new Model Y at all our factories. We rolled out our robotaxi service in Austin and delivered a car completely autonomously directly from the factory to the customer's home. It is a seminal point to get to this thing. I mean, it took a lot of effort, and I really want to thank everybody at Tesla to make this happen. It wasn't an easy thing to do, but we did it. It took time, but we've just begun the next phase for the company. The one big bill has a lot of changes that would affect our business in the near term. The first among those changes is the repeal of the IRA EV credit of $7,500 by the end of this quarter. Given the abrupt change, we have limited supply of vehicles in the US this quarter, as we have already within lead times to order parts to build cars. We've rolled out all our planned incentives already and will start paring them back as we start to sell them. If you're in the US and looking to buy a car, place your order now, as we may not be able to guarantee delivery for orders placed in the later part of August and beyond. The bill also made changes to certain emission standards by reducing the amount of penalty to zero. This in turn will have an impact on the new sales of regulatory credits to other OEMs, and in turn will lead to lower revenues. While we never planned our business around such sales, it will nonetheless impact our total revenues going forward. On the automotive product portfolio, the entire lineup is updated. Globally, we're seeing an increase in the number of test drives. We started the production of the lower cost model as planned in the first half of 25. However, given our focus on building and delivering as many vehicles as possible in the US before the EV credit expires, and the additional complexity of ramping a new product, the ramp will happen next quarter, slower than initially expected. One thing which is grossly underappreciated, and Elon talked about it, is that all our vehicles in the lineup are capable of autonomy. This is by far the biggest differentiator between us and the competition. Our vehicles top safety standard as is, but with FSD, they are and will continue to set a new standard for safety within vehicular transportation. We published our vehicle safety report earlier today, and you can see a car on FSD is 10x safer than a car not on FSD. We've started seeing an uptick in FSD adoption in North America in recent months, which is a very promising trend. And just to give you perspective, since the launch of, since we moved to version 12 of FSD, we've seen the adoption rates really increase. We've started seeing on the automotive revenue front, despite reduction in regulatory credit revenue, and the total automotive revenue increased by 19% sequentially, even though total deliveries only improved 14%. This was primarily due to an improved ASPs because of the new Model Y. This helped in improving margins sequentially as well, along with improved mix and higher fixed cost absorption, despite an increase in costs from tariffs. We started seeing the impact of tariffs in our P&L. Sequentially, the cost of tariffs increased around $300 million, with approximately 2/3 of that impact in automotive and rest in energy. However, given the latency in manufacturing and sales, the full impacts will come through in the following quarters, and so costs will increase in the near term. While we're doing our best to manage these impacts, we are in an unpredictable environment on the tariff front. The margins for the energy generation and storage businesses improved sequentially, while deployment reduced, primarily due to the ramp of power deployments at higher margins. We were able to achieve our highest gross profit for the business yet. Note that the overall deployments will continue to vary quarter to quarter. I think Elon covered this, that industrial storage will make a difference in this drive towards AI and data center growth. The energy requirements are increasing at a rapid scale as AI applications are very energy hungry. The quickest path to scale up energy is deploying storage. This is something that our customers have started realizing, and despite this business having the largest impacts from tariffs, we're seeing customers willing to accept some of the tariff impacts. The big bill has certain adverse impacts even for the energy business, most notably on the residential storage business due to the early expiration of consumer credits by the end of this year. The challenges of the storage business therefore remain both from the bill and from tariffs, and we're doing our best to try and manage through this, but we will see shifts in demand and profitability. The margins for our service and other businesses improves sequentially, primarily due to higher profits from supercharging and improvement in insurance and service center profitability. Operating expenses also grew sequentially as we continued our investment in AI projects, including additional expenses related to employee-related costs, including higher stock-based compensation and depreciation for AI compute. Our operating expenses, especially R&D related spend, will continue to grow. We believe even in the current environment, it is the right strategy to keep making investments in these areas to position us for the long term. Other income grew sequentially, primarily from the mark-to-market adjustment on Bitcoin holdings, which was $284 million gain in Q2, while we got $125 million loss in Q1. Just want to remind people that this would keep creating volatility based on the Bitcoin pricing. While operating cash flows increased sequentially, so did our CapEx, resulting in $146 million of free cash flow. We continue to make investments in various aspects of manufacturing, like the Cybercab, semi lines, and other manufacturing spend, and the expansion of our AI initiatives. Our latest expectation for the year in terms of CapEx is in excess of $9 billion. To summarize, we have near-term challenges in our business due to the negative impacts of the bill and tariffs. However, the investments that we have made for AI, robotics, and our lead in energy sets us up for a bright future. I would like to thank the whole Tesla team, our customers, our investors, and supporters for their continued belief in us.
Great. Thank you very much, Vaibhav. So now we're going to move on to say.com questions. The first question is, can you give us some insight how robotaxis have been performing so far, and what rate you expect to expand in terms of vehicles, geofence, cities, and supervisors?
Yeah, the robotaxi has been doing great so far in Austin. Customers really love the experience. It's like super smooth, very safe, and like just a great experience overall. And we already did the first wave of expansion in Austin, and we'll continue to expand in Austin to probably more than 10x our current operating region. We're also testing in a lot of other cities, as Elon mentioned. The next thing to expand would be in the San Francisco Bay Area. We are working with the government to get approval here, and in the meanwhile, launch the service with the person in the driver's seat just to expedite, and while we wait for regulatory approval. We're also testing a lot of other cities in the US, including Florida, Nevada, etc.
Thank you very much, Ashok. The next question is, what are the key technical and regulatory hurdles still remaining for unsupervised FSD to be available for personal use? Can you provide a timeline?
Well, we're certainly getting there. I think it'll be available for unsupervised personal use by the end of this year in certain geographies. We're just being very careful about it. So.
This is not something which we want to rush.
No.
We want to make sure that everything is safe before we make it available broadly.
Yeah, we're just being extremely paranoid.
Yes.
But I'm confident that by the end of this year, within a number of cities in the U.S., it'll be available to end users.
Yeah, and for what it's worth, the same AI hardware in the Austin robotaxi vehicles has some customer vehicles, and
Right.
we did deliver a car autonomously from the factory to a customer this quarter.
Yes.
And every Tesla manufactured in the US and in Europe autonomously drives itself from the end of line to the loading docks. And so it's just a software upgrade away.
Yeah. I think we'll end up delivering cars in the Greater Boston area and the Bay Area by default from the factory by the end of this year. Like a car will deliver itself to where you are, unless you say you don't want that.
It'll be super cool.
Yeah.
Great. Thank you, guys. The next question is, what specific factory tasks is Optimus currently performing, and what is the expected timeline for scaling production to enable external sales? How does Tesla envision Optimus contributing to revenue the next 2 to 3 years?
Yeah. So the Optimus 3 design, as I mentioned earlier, is, I think, finally the right design. There'll be further optimizations, but there are no fundamental changes that are needed for the Optimus 3 design. It has all the degrees of freedom that you really want or need. So it's, we'll have prototypes of that in, I don't know, 3 months, and then start tooling up production. We'll certainly start production on that in the beginning of next year. The production ramp is difficult. It's always difficult to predict the S-curve of a production ramp when something has got when everything is new, because the rate of production will move as fast as the least lucky and least competent element of the entire supply chain, as well as in internal processes. So the more new stuff that is in a product, the slower the ramp could be because of unexpected supply chain interruptions or mistakes made internally. It's much easier to predict sort of the end of the S-curve or late in the S-curve than the beginning of the S-curve. And the beginning of the S-curve of the production ramp is, in any case, not really material for revenue purposes. The beginning of the S-curve, you're always negative gross margin, and you're debugging a lot of issues. So that's why, I feel like fairly confident in predicting things, or at least medium confident in predicting where we are in 5 years, but it's hard to predict where we are in a year or 2 years. So that's why I think 5 years, I think we could be at the, let me put this way, I'd be surprised if at the end of 5 years, 60 months from now, if we are not roughly making 100,000 Optimus robots a month in 60 months, I would be shocked.
All right. Thank you very much. Next question is, can you provide an update on the development and production timeline for Tesla's more affordable models? How will these models balance cost reduction and profitability, and what impact do you expect on demand in the current economic climate?
Well, I think Vaibhav did a good job of answering this question in his opening remarks. As we said, we started production in June, and we're ramping quality builds and things throughout the quarter. And given that we started in North America and that our goal is to maximize production with the IRA cliff ending in Q3, we're going to keep pushing hard on our current models to avoid complexity. Unfortunately, when that rolls away, we'll be ready with the new more affordable models available for everyone in Q4. And the goal of those products was not to negatively impact revenue or gross margin, but just to make a car that everyone loves and wants at a more affordable price.
Great. Thank you, Lars. The next question is, can you talk about the benefits of Tesla investing in XAI?
This is not the forum to discuss this topic. I mean, if there is something which we need to discuss, we'll discuss it separately.
I think obviously, we're a publicly traded company. Shareholders are welcome to put forward any shareholder proposals that they'd like. I've recently encouraged that, and then have shareholders vote, and we'll act in accordance with the shareholder wishes.
Great. Thank you very much. The next question is, can you tell us a little bit more about what goes on in the Tesla design studio?
Do you want me to take that one? We kind of generally say that what happens in the studio stays in the studio, and that earnings calls are not the place to disclose new product stuff. But we're working to make sure that we have an exciting future for Tesla in the product lineup.
Yeah, there's a lot of exciting things happening in the design studio. It's not like static. And really what's going to happen over the next several years is a fundamental transformation of the company from a pre-autonomy world to a post-autonomy. And I'm working on a new master plan to articulate that Tesla team. And there will be some teething pains as you transition from a pre-autonomy to a post-autonomy world. But I think the future vision for Tesla is incredibly exciting, and will profoundly change the world in a good way. And, this may sound like sort of pipe or whatever, but I think let's just say if we execute on that plan effectively, which is you have to actually do that, Tesla will be the most valuable company in the world by far.
Great, thank you. The next question is actually a duplicate on unsupervised FSD for customer vehicles, so we'll skip that. After that is, are there any news for Hardware 3 users getting retrofits or upgrades? Will they get Hardware 4 or some future version of Hardware 5?
I mean, what we want to do is we want to get unsupervised done on Hardware 4 first. Once it's done, then we will go back and look at what we need to do with the Hardware 3 cars. I mean, like I said, the focus is first to get unsupervised out, and then we'll go back and see what more work we need to do.
Yeah. Great. The next question is, can you give an update on Dojo, and could XAI be a customer for Dojo?
Dojo 2, we expect to have Dojo 2 operating at scale sometime next year, with scale being somewhere around 100K H100 equivalents. And then AI5, which is really a spectacular chip. I don't use those words lightly. It's spectacular chip. The AI5 chip will hopefully be in volume production around the end of next year. That has a lot of potential. I think thinking about Dojo 3 and the AI6 inference chip, it seems like intuitively we want to try to find convergence there, where it's basically the same chip, but is used where we use, say, 2 of them in a car or an Optimus, and maybe a larger number on a board, like kind of 512 on a board or something like that. If you want high bandwidth communication between the chips at a forced serving, doing inference serving, that sort of seems like intuitively the sensible way to go.
Great. The next set of questions have all actually been covered. So we'll end with, How will the BBB elimination of tax credits for solar projects affect your sales pipeline for Megapack?
Yeah, our sales pipeline is quite diversified across customers and market segments. So we aren't heavily weighted in Megapack projects that are paired with solar. And as we talked about in the opening remarks, we're seeing storage quickly being recognized for its ability to unlock grid efficiency and how quickly it can be deployed to help the grid. Additionally, although the recent bill was not favorable towards solar, we believe solar projects will still get built because the energy is necessary, the projects are well developed, and they're ready for execution. And there's really no alternatives in the near term given gas turbine lead times and pricing. We also continue to see growth in the data center segment and in standalone storage projects providing capacity to the grid in several markets across the US. Overall, we're forecasting a very strong second half of the year as we increase deployments. And lastly, we continue to invest heavily in US manufacturing to mitigate policy and tariff impacts, expecting our first LFP cell manufacturing facility to be online by the end of the year and launching our third mega factory near Houston in 2026.
Great. Thank you, Mike. We will now be moving to analyst questions. The first question comes from Emmanuel Rosner at Wolfe Research. Emmanuel, please feel free to unmute yourself whenever you're ready.
Great. Thank you so much. Can you hear me?
Yep.
Thanks. So Ilan, are you able to share any KPIs with us in terms of the robotaxi business? How many vehicles are you operating, miles driven autonomously, or the number of safety critical intervention? Just curious, how the rollout it generally is going and any sort of like targets that you could share more broadly.
Sure.
Yeah, we have more than 7,000 miles operating in Austin area. It's just because service is new, we have a handful of vehicles right now, but then we are trying to expand the service in terms of both the area and also the number of vehicles both in Austin and other locations. So far, there's like no notable safety critical incidents. There, sometimes we have our own restrictions as to, for example, we restrict our speed limit to 40 miles per hour roads. And if the vehicle wants to go on like higher speed roads, we can stop the vehicle, but those are out of convenience as opposed to safety critical nature. So far, the service has been really well received, and we continue to expand on it.
Great. And that, longer term, from an economics point of view, longer term, you've previously talked about working to drive down the cost per mile on robotaxis, maybe towards 30 or 40 cents per mile over time. Now that your service is live, how should we think about the main milestones to getting there?
Yeah, well, the Cybercab which is really optimized for autonomy. That I think has got probably sub 30 cent per mile potential over time, maybe 25. It's really like if you design a car from scratch to be a cost optimized robotic taxi like Cybercab. Like for example, we're not trying to make it corner like incredibly well like a Model 3 would, or Model S or even Model Y. Like it's got all of our cars that are driven by people are super fun to drive. They've got incredible acceleration, the incredible cornering capability. But we're confident that very few people in a Cybercab want to be hurtling around. So we reduced the top end speed, which means we can use more efficient tires. We don't need as much acceleration. We don't need as much, big brakes to sort of. We want stopping distance, but we're not expecting it to be heavily used. It's a gentle ride. Essentially, if you design it for a gentle ride, and then you have a much more optimized design point. So that's why it seems probable that we could achieve that. Especially if Optimus is, serving, cleaning up the car and doing maintenance and stuff. doing automatic charging. So I think it's going to, the actual cost per mile of Cybercab will be very low. The cost per mile of our existing fleet will be higher, but still very competitive. So, yeah, maybe some number of 50 cents, I'm just guessing. Yeah, so this really, Tesla's road taxi fleet will go from tiny to gigantic in terms of operations in a pretty short period of time. Like my guess is it has a material impact on our financials around the end of next year.
Great. Thank you very much. The next question comes from Adam at Morgan Stanley. Adam, please unmute yourself.
Great. Hello, everybody. So Elon, as Tesla moves into this next phase of physical AI, autonomous humanoids, robotaxis, etc., world-changing, civilizational species-changing technology with dual purpose, are you comfortable moving Tesla in this direction while only having a 13% stake in the economy? In the company? Is that sustainable, or do you still insist that something needs to happen, given your current lack of control and the types of technologies you're getting into?
Yeah, that is a major concern for me, as I've mentioned in the past, and I hope that is addressed at the upcoming shareholders meeting. Yeah, it is a big deal. Like, I want to find that I've got like so little control that I can easily be ousted by activist shareholders after having built, this army of humanoid robots. I think that, as I mentioned before, I think my control over Tesla should be enough to ensure that it goes in a good direction, but not so much control that I can't be thrown out if I go crazy.
Okay, Elon, you're not going to go crazy. We trust you.
Well,
you can stay a little crazy. A little crazy is okay. Elon, though, we understand the board of directors of a major U.S. investment bank recently toured Optimus production. I don't know if you want to confirm that or not. It's just what we've heard. That's cool. But when do you think others will be able to get a firsthand view of Optimus like that? And is the second half of this year too soon to have an AI day? Because it seems like everybody else in the world's doing it, and this talent war is getting freaking crazy. And I know you've mentioned for recruiting purposes, this is a very important thing that you've done. I think people have copied you on this, and I'm wondering if this year's too early for that. Thanks, Elon.
Yeah, it's a bit of a tough thing because, like, when we're doing AI Day, we find that some of our competitors have literally done a frame-by-frame examination of our slides and everything we say, and then copy us. So, I would say, like, what's the trade-off? It does help with recruiting, but then competitors look very closely and copy us. I mean, that said, we should probably, I guess we could consider the shareholder meeting to be sort of we can maybe go into depth, some amount of depth at the annual shareholder meeting with respect to Optimus and AI and sort of our chip stuff, perhaps. Yeah. Tesla's also really underrated in terms of AI chip design, as well as AI software. So, like, there's still not a chip that that exists that we would prefer to put in our car. That is an AI chip that we would prefer to put in the car over our own. And even though it's been now out for several years, and we're confident that the AI-5 chip will be a profound game changer. In fact, it's so powerful that we'll have to nerf it to some degree for markets outside of the U.S. because it blows way past the export restrictions. So unless the export restrictions change, we actually will have to nerf our AI5 chip, which is kind of weird. Hopefully we keep raising the bar on export restrictions. Otherwise, it gets a bit silly. But we'll have a bunch of Optimus robots on stage at the shareholder meeting. The Optimus Lab is cool to see. It basically looks like the set of Westworld. You could robots in various stages. Some of them are, in various stages of repair. Like, I don't know, some combination of like the Tatooine junkyard and Westworld. That's what it looks like. It's very cool. And Optimus is walking around the office here in Palo Alto. So just 24/7 is just walking around like it's normal. And you saw Optimus like, the Tesla diner serving popcorn. So we'll go from a world where robots are rare to where they're so common that you don't even look up.
Great. Thank you so much. The next question comes from Edison at Deutsche Bank. Edison, please unmute yourself. Edison, please go ahead and unmute yourself. Right, while Edison figures that out, we will go to the next question, which is going to come from Dan Levi at Barclays. Dan, please go ahead and unmute yourself.
Great, thank you. Elon, you've talked about the opportunity to put non-Tesla owned vehicles into the robotaxi network. Could you just talk about the gating factors to enabling that and what timeline we should expect on personally owned vehicles in the robotaxi network?
We haven't really thought hard about that. Like, we need to make sure it works when the vehicles are fully under our control. It's kind of one step at a time here. We don't want to jump the gun. As I said, we're being paranoid about safety. So it's like, but I guess like next year is, I'd say confidently next year. I'm not sure when next year, but confidently next year, people would be able to add or subtract their car to the Tesla fleet.
I mean, one thing to keep in mind is that we will have some criteria, because like even when you put your car in an Uber or Lyft fleet, they go through a whole checklist process of making sure things are working.
It's like an Airbnb or
yes.
Bad,
yeah. So we will do something like that.
Kind of vetting process.
Yes. Because we want, like Elon said, we want to be paranoid about security. I mean, small things like tread on the tire can have an impact on safety. So that's why we would want to do some proper validation before we let other cars come in.
Dan, do you have a follow-up?
Yes, thank you. Could you just unpack the different costs associated with scaling the robotaxi business and how you think about funding those costs? Are the cash flows in the auto business sufficient to fund it? And if not, what other funding sources do you think you'd use? Would you just fund it off the balance sheet?
Well, as soon as there is a clear cash flow stream associated with any product, you can debt finance it.
And in the interim?
I mean, in the interim, we will use our balance sheet, but like once we get to a certain scale in terms of recurring revenues, like Elon said, we could get into easily a kind of transaction to try and get funding.
Great. Thanks so much. We will now move on to Mark from Goldman Sachs. Mark, please feel free to unmute yourself.
Yes, good afternoon. Thank you very much for taking the questions. With the FSD trials that Tesla has been offering to consumers and the attention on self-driving more generally, are you able to comment more specifically on what you're seeing with FSD subscription trends and take rates and help us better understand how large FSD revenue may be currently?
So we've definitely, like I mentioned it in my opening remarks, since we've launched version 12 of FSD in North America, we've definitely seen a marked improvement in the FSD adoption. And the other thing which we had also done last year is we did bring down the pricing, and we made subscription much more affordable. So we have seen, 25% increase since that time. So, which is an encouraging trend. But honestly, we've just started the story around explaining the benefits of FSD. Like I said before, we released our vehicle safety report. Even if you don't believe in this anything else, a car on FSD being 10x safer should be a motivator. Plus, the other thing is, people don't realize even at $99 a month, it's like you're getting a personal chauffeur for almost $3.33 a day. And this is by far the biggest game changer, which I know we've been talking about it because part of it is we live and breathe it, but
Yeah,
I feel
most people still don't know.
Yeah.
The vast majority of people don't know it exists. And it's still like half of Tesla owners who could use it haven't tried it even once. They don't actually realize that. Obviously, this is something we want to educate them on. So we've got to, when they come in for service, we'll reach out to them, send them like videos of how to make it work. It's such a shocking thing. They don't think a car is capable of this. So you have to show them and get them comfortable with turning it on and off. It's so trivial, but it's like saying you've got a cat that can sing and dance, but it just looks like a normal cat. And you're like, until you see the cat sing and dance and talk, you assume it's just a cat. That's Tesla FSD.
Yes.
Our car is intelligent.
And so what we're going to do, to Elon's point, like we've been giving people free time to try the FSD, but we'll start giving more prompts to say, okay, this particular drive, try FSD. So that, because it's literally seeing is believing. Like Elon said, think of it like a cat. It looks like a normal cat, but this cat can sing and dance.
Yeah.
Same thing on
It's
FSD.
intelligent.
Great, yeah. And the 25% comment was 25% increase in the penetration rate since we've seen the release of V12 and V13 in North America. Great, thank you. Mark, did you have a follow-up question?
Yeah, thanks, Travis. Tesla has historically said it would use pricing as one tool to help drive auto vehicle growth as long as free cash flow stayed positive, given the ability to monetize products like FSD. I'm curious how you're thinking about pricing from here as a potential tool to drive increased volumes, given where you stand with FSD, as well as the fact that the IRA purchase tax credits are poised to go away in the US starting in the fourth quarter. So should we expect more meaningful price reductions given that monetization potential, or do you envision price reductions being more limited compared to cost downs given where free cash flow now stands? Thanks.
Well, we're in this weird transition period where we'll lose a lot of incentives in the US. There's a lot of incentives actually in many other parts of the world, but we'll lose them in the US. But we'll still be at the relatively early stages of autonomy. On the other hand, autonomy is most advanced and most available from a regulatory standpoint in the US. So, does that mean we could have a few rough quarters? Yeah, we probably could have a few rough quarters. I'm not saying we will, but we could. Q4, Q1, maybe Q2. But once you get to autonomy at scale in the second half of next year, certainly by the end of next year, I think I would be surprised if Tesla's economics are not very compelling.
Great. The next question is going to come from Will from Truist. Will, please feel free to unmute yourself when you're ready.
Great. Thanks so much for taking my questions. First, I'd like to ask for a little bit more detail about the lower cost model that you talked about having, I think, started production in the first half, but you said will ramp later. At the last analyst day, as I recall, you talked about some aspects of this, like two-thirds or three-quarters reduction in silicon carbide and not using rare earths in the motor, and perhaps other cost downs. You also had this unboxed architecture that I think you said would not be part of this sort of interim approach. Can you update us on what we should expect this thing to actually look like?
Well, we won't get into the looks because
What's like a Model Y? Yeah. Just leave the cat out of the bag there. Dancing cat that can sing and dance, but it can talk and sing and dance, though. That's the cool part. Yeah, I mean, the fundamentally the biggest obstacle remains that people just don't have enough. It's not that people don't. The desire to buy the car is very high. Just people don't have enough money in their bank account to buy it. Literally, that is the issue. Not a lack of desire, but a lack of ability. So the more affordable we can make the car, the better. I think it's going to be. It will be a very big deal when people can release their car to the fleet and have it earn money for them. Which, like I said, I feel confident in saying that'll happen next year in the U.S. at least. And in the U.S. we're legally allowed, appropriate disclaimers, and that'll make the affordability dramatically greater. Just like you could if you have an Airbnb and you can rent out your home when you're not there, or rent out a guest room or guest house or something like that, the affordability of your home is much greater.
Okay, trying another topic then. We see all these wonderful developments at XAI like Grok, and obviously Tesla's trying to do quite a bit in AI. Elon, how do you manage the division of efforts and recruiting and talent and capital between these two that seem like there's a very high potential that they could in fact compete?
Well, they are doing different things here. The XAI is doing terabyte scale models and multi-terabyte scale models. Tesla's 100 times smaller models. So one's real world AI and one's kind of, I guess, artificial superintelligence type of thing. Really kind of the genesis for XAI was that there were certain people who simply would not join Tesla, AI engineers, because they wanted to work on ASI. They would join Tesla, and I was like, well, maybe they'll join a new company. No, I think the Tesla problem is extremely important, but not everyone agrees with me on that. And so, rather than have them join, OpenAI or Google or some other company, it's like might as well have them create a company in that regard, for it, which is XAI. So that's people can make a decision. Do they want to work on like super intelligence at data center or real world AI? They're both compelling problems, but some people want to work on one and some want to work on the other. Yeah.
Great. And unfortunately, that is all the time we have today. Thank you everyone so much for your questions, and we will see you next quarter.